Written by Andreas M. Antonopoulos. You might think you are too late. You hear stories of people who bought Bitcoin 10 years ago. You see the price today and think the big gains are gone. You feel the ship has sailed, leaving you behind on the shore, watching it disappear over the horizon. But I am here to tell you something very important. It is not too late. The journey is just beginning. There is still a seat for you. The most important time to start learning was yesterday. The second best time is right now, today. The opportunity is not in the past. It is in what is coming next. The world is changing. This is your chance to change with it. Bitcoin is simple in its purpose. Bitcoin is digital money for the internet. A new kind of money no single person, company, or government controls. It works everywhere, for everyone, without needing a bank. Think of it like digital gold. It is rare. It is durable. It can be sent across the globe in minutes. Not just another app on your phone. A fundamental shift in how we think about value and ownership. It gives power back to the individual. Hold your own wealth without asking permission. A financial tool for a global, connected world. The reason it feels late, the price has gone up a lot. This is true, but price is only one part of the story. The real story is adoption. More people, more companies, even some countries. The network is growing stronger, more secure, more accepted. You're not the very first pioneers who mined with laptops, but you are still very early. Foundations built, technology proven. The next wave of global users is just starting to arrive. The moment before mainstream, like the internet in the late 90s. Let go of regret. Don't focus on missed chances. Focus on the clear opportunity of today. How do you start without taking a huge risk? You do not need to time the market. You do not need to be a trading expert. The answer is a simple, powerful habit. It is called dollar cost averaging, or DCA. This strategy is easy to understand and even easier to follow. It means you buy a small, fixed amount of Bitcoin on a regular schedule, no matter what the price is. For example, you might decide to buy $50 worth of Bitcoin every Friday, right after you get your paycheck. This simple act, repeated over time, builds your position slowly and steadily, removing the stress of trying to guess the market's next move. The beauty of this method is its simplicity and emotional discipline. When the price is high, your fixed amount buys you a little less Bitcoin. When the price is low, that same fixed amount buys you more Bitcoin. Over time, this averages out your purchase price, smoothing out the bumps along the way. You are not making one big scary bet. Instead, you are making many small, manageable ones. This turns a potentially emotional decision into a boring, automatic habit. It is like setting up an automatic savings plan, but for a new kind of asset. This consistency is your greatest advantage in a volatile market. Think of it like building a wall brick by brick. Each paycheck, you add another brick. Some days the bricks might seem more expensive. Other days, they are on sale. But you do not stop building. You just keep adding your one brick. After a year, you look back and see you have built a small section of a wall. After 5 years, you have a strong, solid structure that you built with patience and consistency. This is what dollar cost averaging does. It might be hard to believe you are still early when you see Bitcoin mentioned in the news. But let us look at the facts. Globally, only a small fraction of the world's population owns any Bitcoin. We are talking about maybe 4 to 5% of people on Earth. Think about the internet in 1998 or smartphones in 2008. At that time, they were known, but most people did not yet use them daily. That is where Bitcoin is today in late 2025. The infrastructure is being built. Major financial institutions are just starting to offer services, and regular people are only now beginning to understand what it is. You are not late. You are joining before the vast majority. The most powerful reason you are early is locked into Bitcoin's code. There will only ever be 21 million Bitcoin. This supply is fixed and cannot be changed. It is absolutely scarce. Every other form of money we have ever known can be created in larger quantities. Governments can print more dollars, governments can print more euros, governments can print more yen. But no one can create more Bitcoin. more people learn and want to own a piece of it, they will be competing for a share of the same limited 21 million supply. This is growing demand meeting fixed supply. Adoption is the engine that drives this process forward. Every time a major company accepts Bitcoin or a large fund adds it, it sends a signal to the world. It says that this asset is here to stay. This is not a niche hobby for tech enthusiasts anymore. It is becoming a legitimate part of the global financial system. Each new user, each new merchant, each new institution makes the network more valuable for everyone else. This is called the network effect, and you are witnessing its early stages. The party is just getting started, and the doors are still wide open for you to walk in. Consider this: most people still do not know how to buy Bitcoin, how to store it safely, or why it matters. The user experience is still improving. The educational resources are just now becoming widely available. You are learning about it at a time when you have a significant knowledge advantage over the billions of people who will come after you. Being early does not mean being first. It means being there before it is obvious to everyone. By the time your friends, family, and co-workers all own Bitcoin as a normal part of their savings, the period of greatest opportunity will have passed. That time is not now. Let's do some simple math. And we will be conservative. We will not assume wild, unrealistic gains. Instead, let's explore the power of doubling. Bitcoin has doubled many times in its history. Imagine you decide to follow a simple habit. You buy $100 of Bitcoin every month. After 1 year, you've invested $1,200. At an average price of $100,000 per coin, that buys you 0.012 Bitcoin. Small, disciplined start. You're planting a seed. Look ahead 5 years. Imagine the price doubles once, to $200,000. It doubles again, to $400,000. That's 4 times your entry price over 5 years. Your 0.012 BTC bought for $1,200 would be worth $14,800 at $400,000 per coin. No complex trading, just consistent saving. What if you save $250 per month instead? Over 5 years, that's $15,000 invested. If that grows 4 times, it becomes $60,000. This shows the power of consistent saving plus growth. It's not a promise. It's an illustration of a possibility. The future is uncertain. All investments carry risk. The key is time and an asset with asymmetric upside, potential for big growth, while you only risk what you invest. Start now to give your investment time. Time for network growth, adoption, and compounding. There is a powerful reason to consider an alternative like Bitcoin, and it sits right in your wallet. It is the cash you work so hard to earn. Every year, that cash buys you a little bit less. This is called inflation. It is like a silent thief stealing your purchasing power. If you have $100 in a savings account that pays almost no interest, and inflation is 3% for the year, next year your $100 will only buy what $97 buys today. You did not spend anything, but you still lost value. Your savings are melting like an ice cube on a warm day. This is not an accident. It's how the modern financial system is designed. Governments and central banks regularly create more money. In the United States, the government debt has grown to tens of trillions of dollars. The central bank can create more dollars out of thin air to manage debt and stimulate the economy. When the supply of money increases, the value of each individual dollar tends to decrease. That means groceries, gas, housing get more expensive over time. Saving in cash is like swimming against a current. You must work just to stay in place. This is a global problem. People and institutions worldwide seek a safe place to store wealth. They want an asset that can't be devalued by printing more of it. Traditionally, they turn to gold, real estate. Now there's a new digital alternative, Bitcoin. Bitcoin has a fixed supply of 21 million coins. It's designed to be immune to inflation from money creation. It can be an escape from the silent erosion affecting government currencies. It serves as a safe harbor amid ever-expanding money supply. So, when you convert a small portion of your cash into Bitcoin, you're not just speculating. You're diversifying. You're making a defensive move. You're trading a small amount of an asset designed to lose value for an asset designed to preserve or increase its value over time. It's a hedge against uncertainty in the traditional financial system. It's an acknowledgement that your future savings should be stored in a form likely to hold or grow in value long term. For generations, we have been told the same story about work and retirement. You go to school. You get a good job. You work for 40 years. You save a small piece of your paycheck in a retirement account, hoping it will be enough at 65. This is the 40-year plan, a long, slow, and uncertain path. It relies on a stable, predictable world. But our world is changing faster than ever. Working the same job for decades is no longer realistic for many people. Bitcoin presents the possibility of a different path. Not easy, not guaranteed, but faster. Save in an asset with potential for significant growth, and you could reach goals much sooner. We're not talking about retiring in 1 year. We're talking about a 5 to 10-year plan. Work hard and save diligently, but let your savings work harder for you. Change careers, start your own business, work less and live more, all within a decade. Imagine your life 5 years from now. Follow the traditional path. 5 years older, small, predictable savings growth. 5 years deeper into the 40-year plan. Now, imagine consistently saving a small amount into Bitcoin. That small effort could become a significant pool of capital, a down payment on a house, seed money for the business you've dreamed of, the freedom to take a year off and travel the world. This isn't about replacing your job or abandoning traditional savings. It's about adding a new tool to your financial toolkit. A tool with the potential for exponential growth. The 40-year plan is linear. The Bitcoin plan leverages network effects and technological adoption, exponential forces. Start now to give yourself a chance to harness that exponential curve. Create a new option for your future. No lifetime wait to enjoy your work's fruits. A plan for this decade, not distant retirement. The idea of a new financial future is exciting. But the most important thing you can do is start with a small, calm, and educated first step. Start with an amount that feels insignificant, like the cost of a few cups of coffee each week. Do not rush. Do not invest more than you are comfortable losing. The goal is not to get rich this week. The goal is to begin a long-term savings journey. Go to a reputable, well-known exchange, create an account, and make your first small purchase. Feel what it is like to own a tiny fraction of this global network. Your next step is to make this a consistent habit. Use the dollar cost averaging strategy we talked about. Set up an automatic recurring buy for a small amount every week or every month. Let the system work for you. This removes emotion and builds your position over time without you having to think about it. The key is consistency. A small amount saved regularly is far more powerful than a large amount invested once at the wrong time. This is a marathon, not a sprint. Your patience and discipline are your most valuable assets on this journey. As you continue to save, take the time to learn. This is crucial. Your biggest protection is your own knowledge. Read articles, watch videos, listen to podcasts. Learn the difference between storing your Bitcoin on an exchange and holding it in your own personal wallet. Understand the concept of not your keys, not your coins. Your long-term goal should be to learn how to take self-custody of your Bitcoin, as this is the only way to truly own it and control it yourself. This knowledge will empower you and protect you. Finally, remember that this is a journey into a new and volatile technology. The price will go up. The price will go down. There will be exciting days and scary days. This is normal. By starting small, saving consistently, and focusing on the long-term horizon of 5 years or more, you can navigate this volatility calmly. Do not check the price every day. Instead, focus on your savings plan and your education. You are not just buying an asset. You are investing in a future where you have more freedom, more control, and more options. Your journey of 1,000 miles begins with this single small step. Start today. Take a small, calculated step toward a different financial future. The biggest risk may not be buying a little Bitcoin. It may be ignoring it completely as the world moves forward. The journey is just beginning. There is still a seat for you. Start now to give your investment time for network growth, adoption, and compounding.